Chapter 7. Is Bitcoin the right investment for you? Prior to exploring the factors which can guide you to determine if Bitcoin is the right investment vehicle for you, it's crucial to understand the difference between trading and investment. Even if you have basic investing knowledge, it's ideal to review these concepts in the context of Bitcoin investing. In general, trading and investing are two different strategies to make money through financial instruments. The main use of investing is to accumulate wealth over time by buying and holding bonds, equities, currencies, and other financial vehicles. As an investor, you can make more money through compounding or via the process of reinvesting the profits, as well as dividends into more shares. The investments are normally held in a time frame that may range in weeks, months, or even years. You can also take advantage of the added benefits in investments such as interest and dividends. But like other financial markets, the price of Bitcoin can still fluctuate, so investors can ride out the risk with the possibility the price could soon recover, and any loss could be easily restored. You can also refer to market fundamentals in searching for investments, such as managing price-earning ratios as well as forecasts. Meanwhile, trading is mostly about regular buying and selling financial vehicles like currency pairs, stocks, and commodities. The main purpose of trading is to make profits that could outperform investments. If you're active in trading, you can aim for at least 10% profit each month, in comparison to a potential 10% profit of an investor, which may take longer to materialize. The profits that you can earn from trading are basically sourced out from purchasing instruments at a lower rate, compared to selling them at a higher price in a shorter time period. In addition, it's also possible to make profits through selling financial instruments if the price is higher than purchasing to cover if the price falls down. This is known as selling in short order to make profits in spite of the downward trends in the market. Investors are usually patient to wait out the possibility of less profitable scenarios, while traders are familiar with taking losses or profits within a shorter period of time. Traders also use protective stop-loss orders to easily manage in dealing with losing positions at a pre-existing rate. Traders are also adept in using different tools for technical analysis, like moving averages and stochastic oscillators, to search for the trading setups with the high potential in order to make profit. Because cryptocurrencies such as Bitcoin are now treated as financial instruments, you can now make profits through trading or investment. Bitcoin traders normally take advantage of the price fluctuations to make profits, while investors are looking for higher returns over a certain period of time through buying and then holding the cryptocurrency. After gaining a basic understanding of the differences between investing and trading, the next step is to explore the various factors that could help you decide if Bitcoin is the best financial instrument for you. Why trade or invest in cryptocurrencies such as Bitcoin? Investing or trading Bitcoin could be a profitable activity, regardless of whether you're a beginner or an expert in the financial markets. Cryptocurrencies are fairly new, highly volatile, and have wide spreads at the moment. Arbitrage and margin trading are also now quite common, so many individuals are still making profits in investing or trading in Bitcoins. The so-called bubble and the volatility track of Bitcoin has possibly done more to attract additional investors, as well as traders, compared to any other feature of this digital currency. In every instance of the Bitcoin bubble, it's followed by a hype for this cryptocurrency that makes it even more popular. This publicity results in a price increase, because more and more traders and investors are having their interest piqued. For beginners, the Bitcoin platform may be treated as a virtual gold mine, where you can make money anytime and anywhere, as long as you have the right software and hardware. But this is far from reality. Many investors and traders often give up after only several weeks of trading, or once they suffer significantly after a market crash. They don't understand that this is the essence of Bitcoin as a financial vehicle. It comes with high volatility, and the price could easily fluctuate in only a matter of minutes. However, it can be rewarding to own a percentage of what's known as the currency of the future. The main idea here is that you must first understand the key element of Bitcoin, which includes its similarities to conventional financial instruments and its uniqueness as a digital currency. Bitcoin is considered as a breakthrough creation because it's one of a kind, and the world hasn't seen a successful digital currency, despite the fact that there were already earlier versions of virtual cash systems prior to 2009. But nowadays, Bitcoin is just one, but the most popular, of the hundreds of digital currencies, called altcoins, which are all using the blockchain technology of cryptography to manage the production and to transfer value. In the previous chapters, we've already discussed the advantages of the Bitcoin exchange over the present-day conventional fiat system. It's known for its decentralized system, so there's no need for an independent party or a central authority to manage the transfer. Therefore, it's possible to send money to anyone, regardless of the time zone or location. This discards the need for traditional firms, such as wire transfer companies or banks. In addition, the system also gets rid of the need to pay added fees or wait for several days for the money to be available in your bank account. Through the Bitcoin platform, transfer of value, cash, can be facilitated within a few minutes. The nature of Bitcoin as a financial instrument. Bitcoin is a breakthrough because of the technology that supports it and the innovative platform that's free from any interference by the government. But before you begin trading or investing Bitcoin, there are several factors that you must understand about the nature of Bitcoin as a financial instrument. A. Bitcoin prices fluctuate several times a day. Bitcoin became popular because of its fast and frequent price fluctuations. High volatility is a common feature of the equities market, which is not an attractive factor for investors, but appealing for traders who want to make profits through price changes. B. You can invest or trade in Bitcoin anytime. Bear in mind that the Bitcoin platform is decentralized. There's no official platform where you can exchange Bitcoin. That also means there's no official trading time for this digital currency. Unlike the stock markets, with rigid operating hours that exclude weekends, you can still trade Bitcoins anytime and anywhere, as long as you have an internet-enabled device, desktop computer, tablet, or smartphone, and a reliable internet connection. C. Bitcoin is not limited by geography. Bitcoin is not a traditional currency. Its price isn't directly influenced by the policies or economy of one state or government. This digital currency also has a tumultuous timeline before it became a bit stable as a currency, and many of these events are linked with worldwide events. Bitcoin investing versus Bitcoin trading. There's a great difference between investing and trading Bitcoin. Just similar to other conventional financial vehicles, investing money in currency is different than trading in company equities. And in Bitcoin investing or trading, it's crucial that you also learn more about buying digital currencies. Buying Bitcoins can be easy, but it depends on the wallet and exchange you prefer. But this isn't like purchasing foreign currency if you're overseas. There's no need to follow a tedious process, because you just have to search for the right exchange and open your digital wallet, and pay for the cryptocurrency in US dollars. Therefore, purchasing Bitcoin is quite common among people who just like to try the currency, then invest a portion of it, or for those who are merely curious about this emerging virtual money. Meanwhile, investing is part of a long-term strategy, which involves a portfolio that contains different cryptocurrencies, business acumen, and conventional hedging or risk. Usually, investors are not concentrating on the volatility of the cryptocurrency, and they usually don't give up easily on the investment during price fluctuations. Bitcoin trading is often part of a short-term strategy. Most traders are just trying the market, monitor the trade for several weeks or months, and then sell the units as soon as they think that the price is at its best offer. Hence, Bitcoin traders are quite sensitive to price fluctuations and could easily sell the units when there's a risk of losing. Bitcoin trading risks. While there are risks related to trading and investing Bitcoins, the former has higher exposure because of the vibrant nature of this digital currency. Investors are trained to wait out a market downfall, and they normally have the reserved resources to help them cope with the possible losses. Meanwhile, trading is often compared to gambling, because traders should react to the market conditions, and they're adept in figuring out the right time to sell. Most of the risk in Bitcoin trading is often linked with the errors of inexperienced traders. Most Bitcoin exchanges have their own preferred wallets, which you can use to keep your Bitcoins and make trading easier. But certainly this is not the safest method. For instance, one of the most popular downfalls in Bitcoin's timeline is the crash of Mt. Gox, which was the largest Bitcoin exchange of its time. Its collapse led to the loss of more than 800,000 Bitcoins, which have never been recovered. Clearly, it's best to trade or invest in Bitcoin if you're only using your excess money. Never use your kids' college fund to gamble on this financial market. You must also be careful and only invest in reliable and safe exchanges and wallets. Take note that there is no central authority that regulates Bitcoin. In spite of Bitcoin as a modern platform to expand your wealth, the old rule in investing is still true. Never place all of your eggs in one basket. Bitcoin trading capital risks. If you're looking into Bitcoin trading, you'll have an advantage if you have some sort of background in trading or investing with conventional financial markets. Don't trade or invest in Bitcoin using all your capital, as you must first experience and properly understand the current market for cryptocurrency. Most beginners are normally disillusioned with the concept of how much they can make from trading Bitcoins. The exchange for cryptocurrency is definitely more vibrant, and the rates move faster compared to traditional stock markets. However, this also has higher risk. The fluctuations on the value of fiat currency can be gauged in a small percentage of a dollar, while the Bitcoin rates may fluctuate on extreme ends within a day. Is it ideal to invest or trade in Bitcoin? There is no best answer for this question, as the most suitable answer will largely depend on your knowledge about the platform, as well as the resources available. You can begin investing in Bitcoin with a minimal amount of funds, which you can steadily increase as you learn more about the exchange. This is also a long-term investment strategy, which could gradually yield a large amount of cash. This can also neutralize the high fluctuations of Bitcoin, as it will let you understand the market more and avoid large losses. Meanwhile, Bitcoin trading is usually reserved for those who are more skilled in the depth and nature of Bitcoin, and those who have the luxury of time to monitor the fluctuations, which is crucial to make substantial gains even within a single day.